Good afternoon, everyone. This is John O'Hare from O'Hare Wealth Management doing our weekly update. This week we have one question, and actually, if you have any questions, please send them to us. We'll try and answer them next week. You can send it at our service email address, or you can text it to our phone number listed here. Let's go to our first question. What did the Fed's comments at Jackson Hole mean, and how does it affect your outlook? When they say the Fed, they really mean Jerome Powell, the chairman of the Fed. Well, I can tell you, if you watched Friday's action in the stock market, it meant a lot. It was very positive. We had a huge rally Friday because Chairman Powell indicated that he is concerned about unemployment, or I should say employment trends, and that they could deteriorate more rapidly than expected. That he is balancing with the inflation outlook, but he feels, and these were his comments, that the risk on the employment side outweighs the risk on the inflation side. The market interpreted that to mean that he's willing to lower interest rates. So the projections for a interest rate cut in September skyrocketed to 90% plus. And the chances of another cut in December are above 50%. So the market is expecting a rate cut. Now, can he back out of that? Yes, he can back out of that if we get bad data. And coming up Friday, this is going out on Thursday, this video, on Friday, we're going to get the PCE number, which is the inflation number the Fed most looks at. And if that is in line, I think the September cut is pretty much in the bank. If it's not, he might hesitate a little bit, especially if it's much hotter than expected. But Friday will pretty much let us know what's going to happen. The other thing is we are going to get more employment numbers over the next several weeks before he cuts rates. And if that continues to deteriorate, who knows? You might be surprised and get not a 25 basis points or a quarter point cut. He could get aggressive and do another 0.5% cut, which would be good for the market and would be proactive if the employment situation is deteriorating. So does it change our outlook? No, we were still waiting for the Fed to cut. We were hoping they would cut still this year. I think based on some of the stronger data we saw with GDP 4 or 5 weeks ago, we thought that cut could wait till December. And now it's been moved forward to September. But that's 90 days. It really doesn't change our outlook. We still think the economy is in good shape. We don't see a recession coming. I do think the stock market is probably fully priced at this stage. We're not making any changes, but you could see a pause in the upward trend in the stock market. Bonds, obviously, on the short end, rates come down. If the Fed lowers rates, there won't be much change in the long-term bond rates like the 10-year. But our outlook is still for a growing economy, positive stock and bond returns this year, and probably positive returns in 2026. So I hope that helps. We look forward to more of your questions. Remember to take a look at our book for this month, Breaking the Age Code. Nice read, easy read. Talks about the positive outlook you have can affect your age and life expectancy. I found it very interesting. We have another video on that. Take some time and look at. With that, I'm going to thank you for being with us today, and we will be back next week with a new video.